With the new year, how are the housing markets in the Inland Empire? I'm Glen Nelson with Coleman Realty Group. And let's talk about the latest numbers on the housing market in the Inland Empire. And be sure to stay to the end to find out what those numbers mean for you. Year over year, the number of new listings increased 7% to 1,906. Pending sales increased 11% to 1,975. And the number of sold listings increased 12% to 2,292. The median sales price year over year increased 4.4% to $625,000. Days on market increased 33% to 28. For year-to-date, new listings increased 16% to 37,463. Pending sales increased 5% to 29,247. Median sales price increased 6% to 623,343. Sold to list price remained at 100%. This means that the price of a home sold for the same as the list price. So here are the year-over-year numbers for several cities in the Inland Empire. For Corona, median sales price increased 1% to $735,995, with total days on market increased to 34. Eastvale had a median sales price increase of 2% to $899,900, and days on market moved up to 27. For Moreno Valley, the median sales price increased 4% to $560,017. Days on market increased to 27. Riverside had a median sales price of 2% to $662,500, with days on market at 29. The highest increase on median sales price was Claremont, with a 24% increase to $1.1875 million, days on market at 12. Now, what these numbers show is that there has been an uptick in inventory during the last 3 to 4 months, and that is continuing from late last year into this year. Buyer demands continue to drive price appreciation, but at a slower pace than the pandemic years, despite higher interest rates. With interest rates expected to drop in the mid-sixes by the end of this year and continued volatility in the meantime, the market remains ever-changing. All forecasts predict a moderate appreciation rate this year of between 2 to 4%. With so many homeowners having huge amounts of equity, there are no signs of a drop in prices or market bust. Although homes that are above market pricing will be subjected to price reductions since buyers remain squeezed with low affordability. Higher days on market is a movement to a more normalized market in that regard, but homes are still selling over 11,000 a day in the United States. So there is no concern for sellers. It's just taking longer for homes to sell. We are seeing more homes come on the market in the local market, such as Corona, with an 8% increase in year-over-year transactions, and Temescal Valley with a similar number. There is still an anticipated surge in homes coming on the market and transactions with the spring approaching, which is a typical busy period for the market. For buyers, expect prices to continue upwards, but a lessening of the upward trends. While that affects affordability, it can be time to try and buy down the interest rate when getting a mortgage and taking full advantage of buyer assistance programs. Also, wages are outpacing inflation right now, which further helps with affordability. For sellers, appreciation is increasing, but at a slower rate than we have seen in the unicorn years of 2020 to 2022. A moderate 2 to 4% appreciation rate is expected for this year and for several years going forward. This is good news if you're planning on staying in place, but it may affect affordability of sellers needing to buy a replacement property. That can be countered by sellers with a lot of equity to put down on their replacement home and lessen the pains of higher interest rates than what they have right now or have seen. If you're thinking about making a move this year, call us to discuss your options and we can help you achieve your housing goals. Thank you for watching this video. And if you'd like to see more videos like this, be sure to hit the subscribe button and the like button, and we'll see you next time.